The odds of a December interest rate cut are rising. Steve Liesman joins us right now. He's got the latest on that front. And Steve, this has been on again, off again, watching it pretty substantially move on a day-by-day and week-by-week basis.
Yeah, I've gone back and forth on this, but it does appear now, Becky, that the ever-changing winds of this Fed's December policy decision look now to be blowing more decisively towards a rate cut, despite the possibility of a significant number of dissent in the December meeting. Comments by leading Fed officials and reporting by CNBC suggest the Fed is, on balance, more concerned with the weakening job market than it is inflation running too hot. In comments thought to also reflect the thinking of Fed Chair Jay Powell, New York Fed President John Williams said last week, quote, "My assessment is that the downside risks to employment have increased as the labor market has cooled, while the upside risks to inflation have lessened somewhat." Williams made clear he supported a near-term change in the policy rate. Read that as December, at least that's how it's being read. The limited official data backs up the concern. The number of Americans unemployed for 27 weeks or longer has marched steadily higher since May. It remains elevated, despite you can see a slight decline in the recently released report from September. A steady rise in continuing claims. That's just one of the things that's out there backing up this weaker jobs data. The challenger layoff announcements that we've talked about, and of course the negative ADP weekly data. We'll get more on that in just about an hour. To be sure, there's a lot of voters on the committee that have either opposed a cut outright or supported a cautious approach to cuts. That could mean multiple dissents in December. But Governors Myron, Waller, and Bowman, and now President Williams, look ready to vote for a cut. Williams' view likely reflects Powell's that the Fed will remain somewhat restrictive even after a cut. So what's happened? The probabilities keep getting higher. They have been down as low as 33% before Williams talked. Now they're at 73% for December, and that same cut has an 82% probability of happening by January. One way dissenters could be convinced to support the rate cut is position the Fed, depending on the data, for a January pause. Waller, who's a strong supporter of a December cut, suggested yesterday the Fed should go meeting by meeting in January. So maybe that ends up being a pause, Becky.
Yeah, that's what I was thinking. I mean, we already got a cut with a little bit of tough talk at the last go-around where they said, you know, this is not necessarily in the cards for next time around. Would he have to, he being Fed Chairman Powell, have to step up his tough talk this time around if they did it, just to convince some of the others to go along for that vote? We're going to say more than it's not in the cards. We're going to say it's less likely to happen.
I think that's the way it ends up. What's interesting, Becky, is all of the guidance, and I've actually written a piece on this for International Economy magazine coming out in a couple weeks. All of the guidance now happens in the press conference. There's much less of the guidance in the statement. So it might be interesting to see if the chair is able to negotiate in the statement some form of a talk of a pause. Hey, we're going to do this. We're at the top end of our view of neutral, and now it's time to take a break and see what happens. I keep thinking of a couple of things, Becky. One is, I don't know if you make decisions this way, but which decision would you feel worse not having made? And I think the way this balances out is if the jobs data is really weak, the ones that we get after the Fed meeting, I think they'll regret more not having cut for the jobs market than they would having not cut because they're concerned about inflation being around 3%. The other thing worth talking about, as I said, we'll get this ADP data. There's so much jobs data out there and so little inflation data that if you're out there trying to make the case that, hey, inflation is a huge problem, you just don't really have the data to make the case. Meanwhile, we have all this alternative data and even some official data on the jobs market that does sort of show that weakening out there.
I like that approach. You know, which decision do you feel worse about making? Try and live with each decision and see how it fits. It's a pretty good one. I do use that from time to time. And did you say International Economy magazine, Steve? That's where you got your piece coming out? Yeah,
the one where Scott Bessent wrote a big story a couple months ago. They asked me to do a follow-up story on the Fed's communications, how it works and how it doesn't work, the whole communications of the Fed and where it might need to be improved. So that's coming out. I don't know when that's coming out. I'll let you know.